Right. Evidently, this is in session. Thank you so much for those of you who may be tuning in for my Patreon session. Um, it's very, very much so appreciated. Um, one moment here. The thing is that when switching from one thing to another, especially when it comes to using this software, you kind of have to it's kind of hard to explain, but you kind of have to get used to um, learning how to go back and forth and all this stuff, and yeah, it's just a big mess. You have to close out one thing and then turn on another thing and do this and do that, and it can just be a big hassle. It can just be a big hassle. That's all I'm gonna say. But for this is for my video for my Patreon. So this is only for people that are on paying for my Patreon. I do not have this open to anybody else. So only people that are my Patreons are watching this. So what I wanted to do is walk you through was going on in the morning whenever I first saw this, right? Whenever I first saw this, and I thought, and to be honest, I typically don't trade the Nasdaq. I don't trade the Nasdaq, and the reason I don't trade the Nasdaq is because it's super volatile, and it can be one of those things that if you make one move, that it can literally take your account and just destroy it, right? And right now, this paper trading money is fake money right here. I wish this was actually, I wish I would have put my real my real trade in there at that point. At that exact same moment at 13,000. I really wish I would have done that because I knew that's where it was gonna go. I knew it because I had it all figured out. Well, most of it figured out anyway, but I had most of it figured out, but except for the very part at the very end. I thought this was going to happen earlier in the day, and I thought this was going to happen right around noon, and then we were going to see a huge, we're going to see a lot, a bigger thing up at the end. But instead, some things changed, and I'll walk you through those. So. Again, so as I was watching this, and here, let me first take off the mitigation thing, because at one point I had no idea that was even there, right? Let's take off the take profit 2 thing, because at that point that was not there either. All right, so how did I come to this, right? How did I make this call, right? So first I want to do I was watching it as it was going up, and as it was doing its thing, and I was trying to decide if Nasdaq was going to be it ended up being bullish or bearish, and ultimately I decided on bullish, but there had to be some things in play, like there was going to be some bearish moments, of course, but I thought overall it was going to be more of a bullish call than anything. So but I thought there was going to be a bearish moment like that. So I'm in the 15-minute chart right now, right? And I think whenever I first looked at this, I think I looked at it from the top down, right? 4 hour, right? And at the 4 hour I was looking at this and I was going okay, and this was still in the morning here. It was getting up into here. I still had the negative order block over here, right? So I still had this over here that was playing a role, right? And it did play a role, right? So here, let me double click on that. And So that did eventually play a role. But as I was watching it, you know, I was looking at it pull down, you know, and I looked at this, and over here I saw this breaker, right? So I saw this breaker, and I drew this breaker all the way across, right? So the breaker means that there was, you know, a high, a low, and then a higher high, right? So you had the high, the low, the higher high, right? So you had this 4-hour body, right? That was your breaker. I drew that all the way across. Now, at the time, you know, as this is forming, the price had not yet entered that breaker. So my thing was, okay, eventually the price is going to enter this breaker, and then after that, it is when it's going to become bullish. That was my thought process, right? That was my thought process. Okay, so now that we know that was my thought process, and then there may have been some other things, but I'll try to get through those as we, you know, go through the different hours and whatnot, and what else we anything else anything I think of. Oh yeah, soft highs. Yeah, soft equal highs. So we do have, you know, those equal highs up here, right? So this is telling me that liquidity draw is up here. So this is why I thought ultimately that this is going to be bullish, right? Because eventually the price is going to want to get above this area, right? If there's equal highs, again, I've said this many times, usually what that means is that it gets close to it, it does a pullback, you know, then it goes above it, or it does something like that, or it, you know, or it gets close to it. What I saw recently was it got close to it and it hung around there, and then all of a sudden, boom, it just shot above it. So whenever you have close to equal highs, you got to watch out for those, because those are what is going to be are going to be market makers, basically trying to get the retail people into thinking that they want to sell at that level, and then eventually it turns out they're gonna buy at that level, right? Sorry, I'm wearing a new hat. I usually never wear a hat, so I don't know if this like hat does me any justice or not. You know, I'm just trying to wear it because you know, trying to sport the Ethereum here. I don't really know if it looks good or not, but we'll just keep rolling with it. How about that? So now that I know that, to me, the price is bullish, right? Price is bullish because of the equal highs, right? And 4-hour, and we were over in this area here, right? So this is today, right? March 23rd, March 22nd, March 23rd. I'm looking at this and I'm going, okay, I'm going, okay, what's going to happen and how are they going to get above these highs, right? So let's get down to the 1 hour. As we get down to the 1 hour, I'm looking at this, and it may not have been in the 1 hour, it may have been the 15-minute. It had to have been the 15, because the 1 hour just offered that huge drop, right? Offered that huge drop. So I knew price was eventually going to come back up into this area, but I just didn't know where. So I had to refine it and find a better spot to find out where exactly that place is going to be. Now, once I got to the 15-minute, that helped me out a lot more. That helped me out tremendously. And actually, it may have been the 5-minute that actually helped me out tremendously. It was the 5-minute that helped me out tremendously, because then I saw that all of this, right, I don't know if you can see this. Yeah, you can see it. You can see all of this red that is coming down here. So as it was making this huge fall in that 1 hour, during that 1 hour, price was also going back and forth, covering its tracks, basically, is what I like to call it. And what I mean by covering its tracks is meaning by that it's, you know, there's no gaps in price. There was no gaps until we got to right here, right here we got a gap, right? And that's where, as you can see, all the way across, this yellow, or this red overlaps with this yellow. So that's why I left that yellow there and didn't say anything. I left that yellow there and didn't say anything, and I just said this is where it's gonna go, right? Yeah, I didn't want to tell anybody that's where it was gonna go. I just said, hey, I said this is where it's gonna enter, right? And then I said, you know, and if anything, what's gonna happen is that once it enters there, it's probably going to start falling. Now, what I also did is, I put a fib, right? And I put the fib retracement from here to here, right? And I put it to see, for some reason maybe I did do the 15-minute one. Hold on, let me go back and do the 15-minute one really quick. Not the 30 to 50. Something's not adding up here. It was the 15-minute. Okay, so it was the 15-minute. So the 15-minute one, and that means this. No, that doesn't make any sense either. Means I'd have left it there. Use this. Hold on, I'm trying to figure out exactly what I did, because I used the consequent encroachment as one of my determining factor. So the consequent encroachment means that halfway through, right? I took this and I probably did this. I think that's what it was. And so that left me, it still is not pairing up right. Oh, it's because it was supposed to be up here. Yep, there it is. Okay. So this was the original entry, right? That was the original entry I had. Here. Then after I did that original entry, I looked over here on the 5-minute and I tried to find some kind of consequential encroachment, which means that I found, you know, basically a low of the fair value gap, I found a high of the fair value gap, and then, well, actually this is the low of the fair value gap, the high of the fair value gap, and then I found the middle part of that, right? And so the middle part of that was exactly 50% of So that was right there. As you can see, where that red dot is, that's where I took the trade. Right, so I took the trade on that moment at 13,145.51. So I still took it way down here, 13,145.51, but I still took the trade on this candle, on this 5-minute candles when I took it. I just didn't wait for it to get all the way back up here. I took it just a little bit above right here. Well, actually, yeah. Well, what I say, what it was again? 113,145. Oh, come on, show up again. 13,145.51. What's this level? 13,145.49. So I took it barely. It was barely just above this. So exactly where I said I was gonna take the the short is exactly where I took the short. Now the consequent encroachment is the area that I would have loved to if to take the trade, because once it gets that high, that means there's going to be a better opposite reaction going down. So and this is right before, or this is right after the wait a sec, yeah, hold on, I'm getting lost in my time here. Yeah, 9 o'clock. $15 minutes. Sorry, guys. Sorry. I know I probably should be way kind of late. So right here is actually where I had my original trade placed. That's what it was. Okay, this makes more sense. This is where I had my original trade placed. And then I have this yellow line here as the consequent encroachment. That makes a lot more sense now. Okay. And this was still at, but I still waited, right? I still waited for price to get further up in there between 13, what was it, 1345? Where was it I got in at? Come on, show me. No, wanted to show me. It was 1340. Okay. What's my sold? Got in. Oh, that's because that's when it. Oh, this isn't making any sense. Anyways, I got in. Okay. I'm just gonna try to walk you through this without any more distractions. Okay, so it came up right. I found that this was the fair value gap opening. Is what this was. Right. This was the fair value gap opening. This is what I was looking for on the 15-minute. Right. But this is where I wanted to enter, and that's where I put my entry. Right. And that's why I said I just didn't word it like that, on my trading view. I didn't word it like that on my trading view. I just said, hey, this is where I want to enter. It's above this line. It would take out buy side liquidity, which it would, whatever. And then I said what it would do is it would probably fall after that, and then slowly but surely probably get down to this level, right? And then go back up. The one thing, and as you can see, as it was coming down, I was taking profits, right? So here's an area where I took a profit at 13,093, right? There's another area where I took a profit at 13,146, just just to make sure I was having everything. And this is also after I explained, hey, I made a miscalculation. You know, I found something in here that could possibly make this go up. Right, and that's where I went to the 5-minute chart and find it. And it was this right here. So you have a low, right? A high, and then a lower low, right? So that means this right here is that this high, that the last candle that makes a high, right? That is called your breaker. Now it's the body of that candle. Body of that candle stretched all the way across. Guess what it did? Came all the way into that, and you know, decided to turn the other way. And the same, well, and to be honest, the same thing could have been said for the other candle too, because we had this low, we had this high, and then we had this lower low. So you could have actually used that for this candle too, which I think was more likely. And I think this is what I drew actually. So because you had this lower low, or because you had this low, this high, this lower low, this whole green candle right here, even though it's a 5-minute chart, was considered a breaker. So whenever it came down and it touched it and it started going back up, I looked up, I was wondering why it was going back up. I looked over to the left and I realized what had happened. And I said, oh crap. And so I said, okay, here's what we can do to mitigate. We can take profits, right? And then we can also put our stop loss above our entry, right? And that's what I suggested most people do. Because even if you did that, like I said, entry point was right here, right? I said the first take profit was somewhere around in here, right? Because it was a low, or no, it was lower than that, right around here. So it was somewhere around 40, right? Actually, it was more than that. It's giving me this. We went to this entry, down to this low, right? It's where you always look for is a low, right? So you would have got 40 handles just off that, right? Just off that one low, taking profit, right? And then as it's coming back up, and I'm telling you, hey, something's wrong, you know, probably take another profit, and then put your stop loss ahead of this. So I did. I took another profit, and I think it shows that. Here's one profit at 1309.93. Showing 2 more profits, but I feel like there's more. But no, oh, that's because this was the second sell. Okay, so this was the first sell, right? So we got down here, got that taken care of, and then I put my entry or my stop loss right at the entry, right? And then we got up here, and then I sold again, and then I think I forgot to I think I forgot to take the profit out at this point, but I took the profit off here instead. But still, oh yeah. So here was the stop loss right here. So here was the entry. Here was the stop loss, the exact same spot. And then again, that same candle I bought as I went down. And I tried to, and again, I was busy at work, 10:40 in the morning. Of course, I'm busy at work. I'm trying to keep everybody informed as much as possible. And so, you know, that I take profit here instead. At least I get some profit. And I think I moved my stop loss to the entry, because I wasn't for sure what was going to happen at this point, right? Just because of the order block, right? And to be honest, what I probably should have done is wait until the order block until the sell, especially at this point, you know, or at least, you know, sold off all of it, waited till it came back up to the order block, and then sold off again. But as it sold off, you know, it came back up, and it, you know, I marked this. And the reason I marked that was because that was the halfway point, right, between these two, between these two fair gaps, right? So what I was thinking is that once it got above this, right, and I was waiting to see what was going to happen, right? I was waiting to see if it was going to go through it or if it was going to touch it and then go back up. So it went through it instead, and as it came back up, I probably could have sold right here and then got a little bit more of a scalp on that. But instead, once it came back up through here again, that's when I really should have sold. Because after it comes back up above the consequential encroachment, above the 50% of the fair value gaps, that's when you really want to sell. When it gets into the consequent encroachment, is that's when you're going to have the most reaction going downward. Again, it happened here, right? It got to this consequential encroachment, right? And as soon as it got to this one and you sold, what did you see it do? Boom. Went downward. Made it downward fast. So whenever you see it get the price get to those consequential encroachments, which is halfway in between these two fair value gaps, and you see a good sell, it's gonna sell, and it's gonna sell hard, right? So why do I have this drawn here? That's a good question. I believe that's because we have a low, a high, and a lower low, right? So that would make this a breaker, right? So even though it's a 5-minute candle, it's still considered a breaker. Not for sure. I mean, it all depends on the wick, so I'm still trying to figure this out, because the wicks came way down here and then pulled up and then pushed down. I'm considering this one low, so this got higher than that, right? But then this also had a huge wick way down here and it pulled back up, and then now we have the body right here. So I'm not 100% convinced this is a breaker. I had it marked out as if it was a breaker just in case to see what would happen. I don't think it is, but again, I probably should have sold there at that consequent encroachment, watched it come down again, took out sell side liquidity, right? What did it do? It pulled up, and it pulled up, and what did it where this is the biggest part right here. It got into these two. Come on. Oh, stop it. I could have swore I took that off. All right. That. Then you got that. What did it do? It come back up, and you have this fair value gap right here that filled the fair value gap. As soon as it filled that fair value gap, boom, took off way down below again. Where did it get to? That point that I wanted to get to in the first place. That same exact point, 13,000. I even called it 13,000. Delve into 13,000, but I even set it way up. I think I set it way up here. I even have it set right here. If we even click at this is where I wanted it to get to from the very beginning. 13,000. That's exactly where I wanted the price to get to. It just didn't happen at the right time. That's the only thing. So I just wanted to let you all know what was going through my head at the time when I was making this trade. I don't want you to feel like especially if you followed along with it, and how you can follow along with my trades. For one, whenever you subscribe to my trading view, you know, you can set your, I think you can set your alerts to, you know, prioritize them. Also, you know, my Twitter is attached to my trading view, so you can always get, you know, the alerts from Twitter sent directly to you as a priority. You'd have to set that up in Twitter, so you know, those come up, you know, as well, until I can get this Telegram channel up and going. So as far as the best way to find out how I'm going to be, you know, getting these out to you, this is right now the best way. I want to get this Telegram channel up and going as soon as possible, and I want to focus mainly on indices. I want to focus on NASDAQ. I want to focus on SPX, right? Primarily because those have the least what's the word I'm looking for? The least of the spread, right? Those have the least of the spread, and also they can end up being the most, as far as the value is concerned. Now, granted, don't get me wrong, GBP, USD, Euro USD, they can have value as well. You just have to put up a lot more, you know. But you know, it's about the same amount of risk. I just feel like with these, you can get it quicker, and it can be a little bit more satisfying than having to wait and then, you know, guess, and then not really guess, but like trying to really figure out like what's going on with GBP USD or Euro USD. Whenever I can kind of take a look at NAS, or I can take a look at SPS really quickly, and I can say, okay, this is going to happen, because NAS and SPX, they basically have two different time frames during the daytime. They have their morning thing, and then they have their evening thing, right? They, you know, with Forex, they kind of have four different time frames. You know, they have their London kill zone, they have their New York kill zone, they have their London close, and they have their New York close. So they have four different time zones that they kind of have to work with. With, you know, indices, it's pretty cut and dry. It's, you know, New York open, wait a little bit, and then, you know, London close, New York close, kind of like almost at the same time. Then same thing over and over again every day. So I feel like those are a little bit easier. I'm going to try to pay a little bit more attention to Bitcoin and Ethereum, because I feel like those trades can be a little bit easier. Again, a lot of this is going to be on MetaTrader 4, so if you have MetaTrader 4, make sure that you are connected and that you are keeping up in the loop. Again, made some pretty good money today just from this one trade only, and you know, that's all it takes. It takes one trade a day. I was watching, you know, some videos, and if you If you can get 6% a day, right? And if you start off at $1,000, right? Do that 10 years, you're at $1 million. You're a millionaire within 10 years just by getting 6% every day. That's all it takes. And that's just on your lonesome, you know. And then after that, you can start, you know, starting your own business and, you know, doing this. And that's kind of like what I'm not trying to like sub manage people's money. That's not what I'm trying to do. I'm not trying to get into any of that. I'm just trying to get a signal service going for people who really need to, you know, who can make some spare money here and there, make a good 20-30 bucks or something like that, or every other day, and then maybe make 200 a month or something like that, 300, 400 a month, something like that, something that could help pay their car payment or their electricity bill, or just something to help them keep living, instead of having to keep working the tireless and endless jobs that we keep do, especially myself. I don't want to have to keep doing this. I want to retire early, and that's why I want to keep doing this. So that's why I'm doing this for you. So thank you so much. Anything and everything that you guys have done for me, I appreciate it very much. Appreciate you being here and watching this, and hopefully you can understand the thought process that that I went through in my head to make this trade happen. And if you have any questions whatsoever, please leave in the comments, in the Patreon, and I'll be glad to answer them. Tell your friends, see if you want to get them to be interested in becoming a member. Let them know I'm no BSer. I'm here. I'm a straight shooter. I try to be as honest with people as possible. I just want to make sure that everybody's trying to get the best out of their money. I'm not trying to finagle anybody. That's why my thing is $3 a month right now. I'm not trying to with Patreon, it makes you pay something. I literally tried to make it $1 a month. I did, and Patreon wouldn't let me. It said you had to at least be $3 a month, or else it was going to be $1. Just because I was trying to get more people interested. I didn't care about the money. I wanted to get the interest. From people. So that was it. Interesting. I had an order stop and go gold, and I didn't even know it. While we're here, why not? Let's check that out. Let's see what happened with gold. Evidently, I did something on gold and not work out well. NAS, I'm still up 200. SPX, I'm down 200. To history. Ethereum, I have no idea. Mine Ethereum? Say 319. I don't know. Maybe it was just an old thing that just popped up, but either or. Anyways, that's all I got for you guys for tonight. Again, I'm gonna try to keep doing more and more of these of the higher, the ones that are gonna give us the higher, risk to reward, such as NASDAQ, such as SPX, such as gold, things like that, such as Ethereum. I'll try to stay away from Bitcoin and US30, because especially if a small account, those are hard to come by. Even with NASDAQ, that's really hard to come by, especially if you have a small account. Really risky. Especially if you have something like $200 to $500, you can wipe that account in no time. So Got to be really careful with those. So, but I'll try to do my best with these instead of, you know, I like doing forex, um, you know, but sometimes it just doesn't give you the reward that you want it to. Whenever we could find something, we know we could get a good 10 handles off of, we get a good 10 handles off of, you know, that's like making, you know, 100 pips in forex, you know, whenever we could just get 10 handles instead. So and it's the same kind of move. So either way, that's all I got. Sorry for over rambling, but that's what I got for you guys tonight. Thanks again for watching, for everybody on my Patreon, and again, share this with your friends, try to get them to join. Let's see if we can't make Bodies and Wicks, you know, a household name, and let's see if we can't make some people some real money, you know, and